Welcome back. And corporate conversations continue here on ET Now. Thanks for staying with us. We have Mr. Pralay Mondal, MD and CEO at CSB Bank. Now, this is not a bank which is growing at 15 or 20%. This has been a bank which is consistently doing growth between 25 and 35%. Mr. Mondal, first off, the rally in the stock price has been extremely sharp. I wish to congratulate you that investors are rewarding you for the kind of performance that you are putting up. But talk to us. 2,500 crore is your growth in AUM, absolute terms, give or take a few crore. And the entirety of that 2,500 crore is coming from gold loans. Is this a very large risk? If gold were to come off substantially, does your growth get impacted?
Good morning, Ahesh, and
Good morning,
Happy New Year to you and your viewers.
Wishing you a very happy 2026, sir.
Thank you. From a growth perspective, let me put it there. I mean, you talked about the market and stocks. Our job is to only execute and do our job and let market do whatever they want to. But from a growth perspective, I think we have grown two businesses pretty well this quarter. One is the wholesale part of the business, and one is gold part of the business. Because if you look at it, gold is 46%, which is roughly 50% of our portfolio. Then other portfolio would have also grown equally well. Now, coming to the risk factor which you're talking about, yes, gold prices has been reasonably elevated for the last fairly many quarters. And but the good part is that we have taken risk mitigation in terms of what we need to do. And our LTV overall is somewhere around 60% or below at this point of time. And we also do our risk analysis in terms of sensitivity analysis of if there's a 5% drop or 10 or 15, 20% drop and see where we are. Also, what happens is this LTV includes the interest rates in that, the interest gets added. So to that extent, that kind of a huge margin is there. And these are all short-term book. These are like 6 months, 1 year kind of a book. So from a risk perspective, we are pretty well covered. But yes, I mean, we have to build up the other businesses. The wholesale business is picking up pretty well. We have put our entire core system migration and other systems in place. So now retail will also start picking up. And of course, the most important thing is how do we build the deposit franchise? And that's the game which is going to be playing out in the next 2 to 3 years. And that's what will build the bank for future.
Right, Mr. Mondal. I'm trying to figure out what the downside risks to this growth could be because such a fast pace of growth. Now, your loan to deposit ratio, if I'm just trying to pull that out, it's around 90%. Is that a concern? And is deposit book accretion proving to be a challenge?
The deposit book accretion is a challenge from the entire ecosystem because what's happening in the macro, right? And all the banks are going through a little bit of a challenge on the deposit accretion. The systemic deposit growth is much slower than the asset growth for the last few quarters. And hence, to that extent, not only us, we are a small bank, even medium and large sector banks are also going through the similar challenge. So there is no uniqueness to that to us. Having said that, on your question on the CD ratio, yes, we are a little higher than 90%. Our comfort zone is between 85 to 90. But the reason we are still quite comfortable is because there has been a large borrowing book, FCY borrowing we had taken from IFC and HSBC and some of the other banks. So that gives us that cushion. We are also sitting on fair bit excess SLR. So to that extent, from a liquidity perspective, our LCR is quite comfortable. So that way, from that perspective, it's not an issue. But yes, going ahead every quarter, every bank has to focus on deposits, and so will we. We will also have to do the same thing.
Absolutely. Mr. Mondal, therefore, can I, with great comfort from an investor lens, say that LDR will not impact your loan growth?
No, it will not. Okay. LDR will not impact our loan growth. And we, of course, will not take any liquidity risks because when you're growing by 29% this quarter, last quarter also we grew by similar kind of a number. But our guidance is between 25% and above. So to that extent, we have fair bit of margin between what we are kind of guiding the markets or straits vis-a-vis where we are today. So we don't have that challenge at all.
Okay. Mr. Mondal, my sincere apologies. I'm going to have to pause you here. I have to take a committed break, but I'm going to come back straight back to you, ask you a couple of more questions, and then let you go.
Sure.
Thank you so much for staying put. And viewers, thank you. This conversation will continue.